Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. I believe that centralized exchanges and everything else will be great for a very long time. However, these peer-to-peer trades are what really make this space exciting and new. How can we get rid of middlemen? When it comes to crypto, a lot of those middlemen aren't needed because fast settlement means you don't need an extra step with the risk that comes with intraday settlement. If everything is decided in real time, you can cut out the middlemen and save money. That needs to happen on the blockchain. We're putting more and more of our goods on the blockchain with Coinbase. We're trying to play in that space with DeFi and self-custodial wallets to make sure we unlock the full potential for innovation. Because it used to be that only about 10% of people wanted to invest in this type of asset. But now billions of people, or the majority of people in the world, can benefit from it. Cathie Wood, an investor in ARK, heard from Coinbase CEO Brian Armstrong last Thursday at the State of Crypto Summit that the cryptocurrency business has become a big political problem in the US, and that both Democrats and Republicans know how important it is to voters. Brian said that crypto is becoming a topic of conversation across party lines and could have an effect on the November presidential election. This shows that the business is becoming more politically powerful. Both sides know they need to find a solution. Armstrong said that cryptos have arrived and that the main topics of conversation are clear rules and protecting consumers. Armstrong said that the House of Representatives passed the Financial Innovation and Technology for the 21st Century Act FIT21 in May. FIT21 separates the control of cryptocurrencies from the trading of crypto-friendly commodities in the futures market. Asked CFTC and Gary Gensler to do something, it's clear that the FIT21 Act rules cryptocurrency. It means that the SEC will be in charge of controlled blockchain networks and the CFTC will be in charge of functional, decentralized ones. Gensler and Rostin Graham, chair of the CFTC, were asked about how to regulate cryptocurrencies at a meeting on Thursday in the Senate Appropriations Committee. Biome told Cathie Wood that his business was ready. Armstrong said that all of these trends show that crypto and digital assets in the US are in for some interesting times. They talked about spot Bitcoin ETFs and interest in the business from big investors. The first one is actually a change in technology that will make a lot of goods possible. However, if any of you haven't seen Base, it's our second-level answer. Helping blockchain grow is very important. In other words, Layer 1 networks were the first thing that happened in crypto. Even though they were a bit slow and pricey, you could see what they could do. Layer 2 is now online, which is similar to when the internet went from dial-up to broadband. It makes it possible to do things like send USD coins quickly and for free anywhere in the world. That changes the rules for things like payments, sending money back home, and other things that make the market run more smoothly. People would also lose it sometimes when they put it in the wrong place. Now all you have to do is use a sensor like a fingerprint, and you have a crypto wallet in any app. Because of this, crypto wallets are being added to a lot of Web 2 and Web 3 companies that are already built on the blockchain. And what we're seeing here is that crypto started out as an asset class that people wanted to buy. It's great. You should know that it's more than $1 trillion. And over 400 million people around the world have used crypto. That's about 5% of the world's population. It's now moving from being an asset class to being useful in the real world. All of these things are now possible online, including voting, payments, decentralized social networks, and direct connections between content authors and their fans. That's how we get 1 billion or more people to use this again. And it's kind of adopting at the same rate as the early internet. The Coinbase CEO later said that he and other crypto CEOs had been meeting with Democratic and Republican senators and congressmen in Washington, D.C. to ask Congress to control the business. Lobbying money will help congressional candidates who are friendly to cryptocurrencies in the upcoming state elections before Coinbase. A 16Z Ripple Fair Shakes PAC, the private venture capital firm run by Andre and Ray Horowitz, gave $25 million to Jump Crypto. $10 million were given to the U.S. effort by Solana's Fire Dancer inventors. A group that fights for consumers' rights called Public Citizen found that Fair Shake and other digital assets super PACs have raised the third most money of all super PACs before the 2024 election. A group called Fair Shake has spent more than $1.3 million and more than $10.7 million to fight against Kate Porter, who is against the cryptocurrency business. With Jump Crypto's latest gift, Fair Shake has given $122,000 to Dusty Johnson and Josh Gottheimer, 2 Republican and Democratic representatives who were very important in writing and negotiating FIT 21. This is how much Fair Shake raised for lobbying during the Wood talks: $169 million. Armstrong talks about spot Bitcoin ETFs and institutional interest in Bitcoin and other digital assets in more interview clips. Coinbase should be interested in DeFi and self-consolidated wallets, so why are they? Don't you want everyone to have their money on your platform? I also believe that centralized markets and everything else will be great for a very long time. But these peer-to-peer interactions are what really make this interesting and open to new ideas. How can we get rid of middlemen? There are a lot of middlemen that aren't needed with crypto because rapid settlement means you don't need an extra person who takes on some kind of risk like there is with intraday settlement. With real-time settlement, you can skip the middleman and make the market run more smoothly. That needs to happen on-chain. You should know that Coinbase is putting more and more of our goods on-chain. With self-custodial wallets and DeFi, we're trying to play in that space to make sure we unlock the full potential for innovation. This is because it goes from being an asset class that only about 10% of the world wants to invest in to something that billions of people, or most people in the world, can benefit from. I mean, crypto should really power a bigger and bigger chunk of the world's GDP over time, since they're just better lines. You might ask why not, since payments tend to follow the road with the least amount of resistance. Why wouldn't it happen more and more over time? So yeah, well, we really want the business to do well in any market, so let's change that to positive in any market. We've done a good job of changing how much money we make. It was about 95% trading fees 3 or 4 years ago. These fees can change a lot based on whether there is a lot of trading that quarter or not. We've changed it so that it's more and more subscription and service income, which is more stable. And that's helped us make it happen. It lets us plan the business over a longer period of time, making things more predictable. I believe we've been able to cut costs a good amount. Be very careful about how we increase costs and still put money into the next versions that will be more innovative, such as the smart wallet and Base. Also, how do we take online payments for goods and services? How do we use crypto to accept funds for politics? How can we get it into more and more parts of the cryptocurrency market? International growth is the other big piece of the puzzle. We began in the US, which is still our biggest market, but now we've chosen 10 bigger ones. We call these places our Go Deep markets, and we're starting to make a lot of progress there. We have local partners and licenses already in place. In fact, our foreign and Q1 revenue grew faster than our US revenue, so we've started to make that a bigger and bigger part of our core markets in those 10 Go Deep markets. We also have what we call our Go Broad approach. This means that with self-custodial wallets, we can get into the long tail of countries, including some of the biggest emerging markets. The Coinbase wallet is what we sell there. We sort of go deep or go broad based on how mature the market is and how the rules are set up there. This has worked well for our international growth. Well, they need to stay ahead of the curve, so they see the promise in this technology, and as we talked about, many of them are leaning into it. They're saying, hey, we're not going to wait for something to happen to stop us. Because that's how business works. We want to be a part of that change. Sometimes you have to bother yourself all the time, or else someone else will. And so Coinbase, it's great in financial services. You might be rivals on one product, but you're a customer of the other product. So we all work together in that way. Coinbase has a developer platform called CDP, which stands for Coinbase Developer Platform. We've made a lot of the core primitives that we've built, which help with things like trading, custody, and integrating into all these blocks.